Welcome to the Iowa Economy Podcast. I'm your host, Chris Conetzkey, president of BPC and publisher of the Business Record. The Iowa Economy Podcast is your place to get the economic insights you need to help your business stay ahead of Iowa's economic curve. We've got two fantastic guests with us today to help us digest what's happening, what might be happening in the future. With us today is Christopher Pudenz. He's the economics and research manager and an economist at the Iowa Farm Bureau Federation. He's got a PhD in economics. And in addition to his role with the Iowa Farm Bureau, his family has owned and operated a beef cattle feedlot and crop farm in western Iowa for 3 generations. He starred on our economic forecast panel earlier this year. He made numerous predictions that, of course, all came true. So welcome, Christopher.
Thank you for having me today, Chris.
I'm glad to have you back. You did a great job in the economic forecast. I promise we won't hold you to all those predictions. You were not as overt about those as I'm making it seem out to be. But it will be interesting to touch base with you about what maybe you've seen and from that point, because we were right in the middle of things at that point as it related to tariffs and just starting to see and trying to predict what might happen. So it'll be interesting to take a look at where things have come. Also with us today is Jason Andringa, who is the president and CEO of Pella, Iowa-based manufacturer Vermeer. A third-generation family member, Jason stepped into the role of president and CEO in 2015, taking the reins from his mother, Mary, who is a Business Record Woman of Influence honoree. And with his engineering background, he's really helped continue to push the business to innovate and pursue business in new markets. Welcome, Jason.
Thank you. It's great to be with you.
And Jason was a recent participant on one of our other events as well and has been featured recently as we've been talking about the manufacturing economy in a series that we've been producing. So today's a really good opportunity to go a little bit deeper into that and get a little bit of a window into one of the largest manufacturers here in the state and what they're experiencing. We'll have an opportunity to hear more from Jason later on in the program, but first we want to get a quick snapshot of the economy. So Christopher, that means you are up. I've asked him to give us, to help bring us up to speed on what has been happening in the economy by providing 3 economic insights in 3 minutes. There's no shortage of things happening. That list could probably be 10 to 15. So, Christopher, it's on you. 3 minutes. Give us 3 things that we should be thinking about.
Thank you, Chris. The 3 things that I wanted to kick off this conversation with were row crop profitability, ag manufacturing in Iowa, and trade as it relates to agriculture here in the state of Iowa. So starting with row crop profitability, the skinny of it is that the row crop economy here in the state of Iowa is struggling for the 2nd year in a row. It's a combination of being in a high-cost environment with low prices. Corn and soybean prices are substantially lower than they have been even as recently as 3 or 4 years ago. So that has put substantial margin pressure on many of the row crop producers here in the state. After all, Iowa is the number 1 producer of corn in the country and the number 2 producer of soybeans. So that's the first thing. Unfortunately, as I did say at the Business Record luncheon at the beginning of 2025, when agriculture sneezes, the rest of Iowa catches a cold. And one of the areas of the economy that has caught a cold is ag manufacturing. Much of the ag manufacturing in the state produces things that are used for the row crop production agricultural economy. Combines, planters, things like that. So as farmers have pulled back their purchases of those implements, that has led to layoffs in that ag manufacturing sector. The third thing I mentioned was trade. Trade continues to be a frustrating thing for many folks in agriculture. I mean, for nearly 60 years, the U.S. had a positive ag trade balance with our trading partners around the world. That flipped negative for the first time in 2019. And I'm an economist, so I have to say there's nothing inherently bad about a negative ag trade balance. But the reason it flipped negative is because since 2014, our ag trade has, our exports have only grown 1% per year in value, while our imports have grown 6% per year in value. So it reflects more of a stagnation in our exports that we are sending abroad than anything. And since Iowa is an exporting powerhouse when it comes to agriculture, like I said, we're the number 1 producer of corn, we're the number 1 producer of pork, and the United States exports about 30% of its pork production every year. That has major implications for farmer bottom lines at the farm gate.
Nice job. You figured out a way to cram a lot in 3 minutes for us to digest. We're going to welcome Jason back on as well. He's got the opportunity to ask questions as we kind of try to unpack some of that. So I want to go to the line about when the American economy sneezes and agriculture sneezes. I mean, it's even in our office, that's been one that has stuck around all year long as we've been talking about it. So well done, I guess, from that standpoint. Maybe for folks that don't have quite an understanding of exactly where that ripples through to, can you help dig a little bit deeper into that and help us understand what we're seeing here?
Yeah. So the saying goes, it comes from like a national saying, right? Or an even international saying. When the American economy sneezes, the rest of the world catches a cold. And the idea there is that America is a financial powerhouse. America is a consuming powerhouse as the world's largest economy. And so what impacts the American economy impacts the world economy. Transposing that to the Iowa situation that we've been discussing, agriculture is one of the most important industries here in the state. There's agriculture represented in all 99 counties. Iowa has this very good soil base that serves as, a wonderful natural resource in order to produce corn and soybeans and then feed those corn and soybeans to livestock like cattle, hogs, poultry, ethanol plants, soybean crush plants, things like that. So as the farm economy slows, as those producers face struggles, they spend less money on things in their local towns, right? They spend less money on Main Street. They spend less money at the implement dealer that's selling agricultural equipment, sort of like we discussed. They spend less money at Iowa State University football games, right? There is just this general pullback in throughput in the Iowa economy when farmers are feeling a pinch in their pocketbooks. And because agriculture is so foundational to the state economy, those ripple effects get big and they magnify throughout the rest of the state.
Now, Jason, I know that this isn't actually, the agricultural equipment isn't the biggest portion necessarily of your business, but I'm curious at what you have seen in that space, and then maybe bring it to the rest of your business as well too.
Absolutely. So first of all, I need to draw a distinction between the segment of agriculture that Vermeer is involved with and row crop. My grandfather's most iconic invention is the round hay baler, which he invented in the early 1970s. So the segment of agriculture that we serve is the forage segment of agriculture. So you see the evidence of that in corn stalk baling. That is something that has really come on over the last 1 to 2 decades. But corn stalks is only one of the forage crops that round baling is used for. And then ultimately the end customer for the part of agriculture that we're involved with is livestock and predominantly beef cattle. So, really, last year in 2024, we didn't see any softness in the part of the market that we serve at all. And this year we did see softening, but not to the extent that row crop agriculture was experiencing. And we think we're already starting to see some recovery from the softness we saw this year. So for sure, that's driven predominantly by record high beef prices. And so, those farmers that grow their own forage crops, maybe they have some row crop that they feed to their cattle. They bale their corn stalks, they mix that with cattle feed. Those farmers are still making some money because of the record beef prices. But we're a proud resident of the state of Iowa. Vermeer is. We've now entered our 78th year. We've been headquartered in Iowa for our entire history, and we love being based in Iowa. So we're very knowledgeable and very aware of what's going on in row crop agriculture. So we've seen the impacts. We're connected to a lot of people that experience the impacts, but it hasn't affected us to the same level as those, ag manufacturers that are focused on row crop.
Christopher, back in January, there was just a lot of uncertainty about what the effects would look like. Um, I always hesitate to pin somebody to whether it's better or worse than you thought it would be. But as you think about what we've experienced so far, would you say it's been in line with what you were kind of thinking? Worse? Not as bad?
It's been pretty well in line with what I thought it would be. We have continued to see layoffs in that ag manufacturing space. Back then, we were dealing with just over 4,000 layoffs in the Warren system since they started. With earlier in 2024. Now we're up right around 5,900. So layoffs have continued to accumulate in that ag and ag adjacent space. I had some optimism for higher corn prices through the summer. I didn't go on the record at your event saying that, but I went on the record at an event in May expecting some higher corn prices. And those never really materialized as the summer went on for a number of reasons. In large part, we had the largest crop ever produced in this country, the corn crop specifically, and the weather conditions were favorable in July, and so prices never really caught the support that they needed to. But in terms of like the ag economy as a whole, it's been about what I expected it to be.
You mentioned exports earlier as well. Go maybe just a little bit more into what you're seeing in that space here now as we've had more runway as we've been navigating the tariffs, although we'll probably talk about it at some point with the Supreme Court taking a look here as well. It's created some more uncertainty. So maybe just a little bit more context of what you're seeing from an export standpoint.
Yeah, the tariff impacts on our ag exports are very much commodity specific. So for corn, Iowa doesn't export necessarily a lot of corn itself because of all our domestic demand centers, but corn is corn, right? And so we export roughly 19% of our corn production, but 40% of those exports go to Mexico. So just clarifying that comment there. And because Mexico is such a good customer, we haven't had as many blowups with them. Still some conversations happening with them. The corn export situation has been very, very strong, nearly a record year, if not a record year for that 2024 crop. Soybeans are very different. We export roughly half of our soybean crop every year, and half of those exports, so 25% of the total production, typically go to China. We sold some soybeans in the first part of the year to China, roughly 6 million metric tons, but then they just turned the spigot off. Their government told their buyers, you aren't buying any more U.S. soybeans until we get some trade stuff sorted out. And until like just a couple weeks ago, they hadn't bought a single soybean from our new crop that we are harvesting right now. And so that has had downward pressure on the soybean markets for sure.
And if I understand right, there's at least a commitment in place, but I think that's still whether the commitment will happen or not is. Now I'm starting to try to paraphrase another economist from one of our earlier discussions, and so that's always a risky spot for me to be in. But I believe that's partially the question there, right?
Yeah, it takes two to tango, right? And right now we are saying that we signed on to something, and China has made these agreements, and China isn't saying the same thing yet. So I don't know if they're trying to get just a little bit more, or if they're trying to get some sort of strategic advantage out of waiting. But the proof will be in the pudding as to whether or not China holds up their end of what we're saying they committed to.
Jason, from an import standpoint, I imagine steel, I believe, is a large portion of what you all are navigating. What have the effects necessarily been from that standpoint, from a tariff perspective?
Great question. And for this podcast, people who understand commodities will understand this. We purchase almost all of our steel that we use domestically within the United States. But I keep telling people that when the price of corn goes up in Nebraska, the price of corn in Iowa is also going to go up. So when the steel and aluminum tariffs went into place, U.S. spot steel prices immediately went up. It didn't go up the full 25%, and then it didn't go up the full 50%, but it went up 20% and then 35% respectively. From everything we hear, there is sufficient supply within the country to meet demand. So, as that genuine supply demand dynamic plays out, we've gradually seen the price of steel come down. But the nature of our business, we typically buy ahead, months ahead. We contract out, and so it's uncertain. And we certainly anticipate, as we continue to buy steel, it's going to be at least slightly elevated prices in comparison to what we were buying a year ago.
Well, Jason, nice segue in here. We're going to get a chance to talk to you a little bit more about your business, and a good transition here. And so, Jason, as you're trying to run your business, what are some of the indicators maybe that you try to watch more closely as you're trying to project out and plan for your business?
You alluded to it before. So the forage part of our business is the minority of our business. The majority of our business is the industrial side of the business. Coincidentally, every part of the Vermeer business can trace its heritage back to the farm. So my grandfather built power takeoff driven tiling trenchers in the 1950s, and the majority of our business is what we now call the infrastructure side of the business. And that part of our business is booming. It is
data
booming.
centers?
So yes, that's a big part of it. So
Okay.
we've been building machines that are used to install underground infrastructure for 70 years now. That's the biggest part of our business. So it's everything from fiber optic, which is booming, the undergrounding of electric infrastructure, which is booming, all of the above. Energy infrastructure generation and energy distribution, water and sewer. So every aspect of that is strong right now. And frankly, it is both government funded. There's frankly a lot of state-driven broadband fiber optic infrastructure that the funding is just now starting to roll out. And then, as you alluded to, there is just this incredible demand for data centers, for quantum computing centers. And a lot of those data centers, they're building facilities based on energy and water availability. And then when they build another one 600 miles away, they install their own private network to connect the two. And they connect their entire network together. So yeah, it's really kind of an all of the above underground infrastructure boom, and it is both a public and private infrastructure boom.
We talked a little bit about the challenges relating to input pricing. What other challenges maybe are you seeing both for your business and the manufacturing industry as a whole?
So, tariffs are a factor, not as significant as a factor as maybe other companies, in part because we really always have sourced all of our inputs domestically from a tier 1 perspective, but for sure a tier 2, tier 3, tier 4 supplier perspective, we're constantly negotiating the impact that they're seeing from a tariff perspective and an inflation perspective. So, we're monitoring that closely. Certainly there's an immense enthusiasm for AI right now. If that enthusiasm cools off at all, we'll be very actively working to assess what that means for us. So yeah, I would say, the trajectory of AI, the impact of tariffs on our business, and the impact of inflation on our business are probably the three things we're keeping the closest eye on.
When you think of opportunities for Vermeer and places you're continuing to look at during this period of time, what are some things you guys are looking to do to continue to expand your business?
Well, one area so Pella, Iowa always has been our headquarters, always will be our headquarters. It's the center of the Vermeer universe, I like to say. But we actually manufacture two other locations within Iowa. We have a factory near Griswold, Iowa. And then we actually started a factory in Des Moines a couple years ago. And really that was to open up a new pool of labor. And it's been wonderfully successful for Vermeer. We are thrilled to have a footprint in the Des Moines area. And then we also have a applied technology hub in Ames. So we actually have 4 different footprints in Iowa, and then we have 3 other manufacturing footprints within the United States, in other states: South Dakota, South Carolina, and Florida. And we just doubled the size of our factory in South Carolina, and that factory is focused on vacuum excavation, particularly truck-mounted vacuum excavation, which is a rapidly growing aspect of underground infrastructure. So we call it soft dig. So instead of using an excavator to dig into the ground, you use vacuum excavation, hydrovac excavation, to open it up. And then if there is infrastructure already in the ground, you're not going to damage it. You're going to remove the soil and the rock around it without damaging the infrastructure. So, that is a really exciting part of our business as well. So, that's one thing that's kind of on our minds right now, is just that new expansion that we've built in Greenville, South Carolina. But yeah, I mean, honestly, we're seeing the forage part of our business re-strengthen, and then the final part of the business that I haven't talked about is what we call the environmental side of the business, which is essentially organic processing. So after in Iowa, to use an Iowa example, either a tornado or a derecho, a lot of organic waste. Vermeer machines are used to reduce the size of that waste. Just reducing the size of organic waste to wood chips, either through wood grinders or chippers, the tree care industry, the landscaping industry. That part of the business was soft as well for a while and is picking back up. So I would say we range from booming on the infrastructure side of our business to strengthening on the environmental and forage sides of our business. So those are the things that we're spending our time thinking about, and we're, as I like to say, we're kind of back to the good problems, which are ramping up capacity to meet demand.
Well, that's good to hear, and part of one of the reasons I wanted to bring you on is because I think oftentimes, because there are challenges in manufacturing, that there can be a lens of that all manufacturers are struggling. That's not necessarily what's happening. There's opportunity, and it's likely ones that are doing the things that you're doing on innovation standpoint that has opened up different markets and diversifying. So
yeah, it's a great comment. Honestly, there are times that we're suffering worse than kind of the average Iowa-based manufacturer, and there are times that we're doing better. And thankfully for Vermeer, we're holding up better than kind of the general Iowa and national manufacturing infrastructure base.
we're going to turn our attention to the future just a little bit here. And so we've got a little segment where just Ask an Economist. And I've got great questions, I think, but the best questions often come from our readers. And so I've got one here from Billy Hunt. She's the executive director for America's Cultivation Corridor. Billy asks, she says, in our state, we take pride in 3 major industry sectors: finance and insurance, advanced manufacturing, and food and agriculture. And she says, we recognize that a significant portion of the finance, insurance, and manufacturing sectors are directly tied to food and agriculture. Given our state's economy has recently declined alongside Nebraska's, how long do we anticipate the agricultural slowdown will continue to weigh on our economy here? And when might we expect a rebound? So Christopher, why don't you take that away?
Yeah, thank you, Billy, for that question. It really is hard to tell. And that's because, like Jason mentioned, when you're dealing with commodities, you're dealing with a world market. And he mentioned Iowa, Nebraska corn. Well, yes, right? Yep, that's absolutely correct. And that's a great example. But now the United States is increasingly having to deal with corn in Brazil, right? Brazil just continues to expand their corn acres. They're planting corn as a second crop to a first crop of soybeans. It's much warmer in Brazil than it is here. And they're converting millions of acres of this scrubby grassland they call the Cerrado into corn acres that they are, then selling that corn on the international market. So how do you proceed to turn around that row crop economy, which I think is really at the root of some of the economic challenges that the state of Iowa is facing here. How do you turn that around when your revenues are determined largely by commodity prices? And so one of the things you can do is continue to increase and encourage trade around the world. The recent steps that the administration has made, we talked briefly about that deal with China. That will help the soybean folks. And if soybeans are more profitable, that will help, increase soybean acres, which will pull back corn acres, which will also help corn be more profitable here domestically next year too. So there are some good ripple effects of that. So there's the revenue side, but there's also the cost side. I mentioned that we're in a high cost environment. How can you bring costs down? Feed, machinery, not feed, seed, chemicals, machinery, fertilizer, things like that are all substantially higher than where they were 5 years ago. So how can Iowa's farmers pull what levers they can to bring those costs down? I found Jason's comments about the different technologies that Vermeer has come up with to be very insightful. For example, my parents' farm in western Iowa, they use a Vermeer baler to bale corn stalks to feed to their cattle. And that's something that they didn't do 20, 30 years ago. So that's a new way to take what was kind of a waste product before and turn it into something valuable on my parents' farm.
I promise we didn't place Christopher for you on that one, Jason. So
I appreciate it though, nonetheless.
So, and you guys make a great baler, and you have added innovations that specifically help the folks who use those balers for corn stalks. So little things like that do make a difference on the cost side of things. So bringing costs down while doing what we can to reinforce and to increase demand centers for our row crop product to sort of tie a bow on things. I think that's going to be what sort of refires the engine of the Iowa economy.
Well, great response, and I know it's a one with many tentacles. So I want to keep looking to the future just a little bit here, and as we get close on time. Jason, maybe I'll start with you. Is maybe something that you're watching in the future that you think businesses and business leaders should be watching as it relates to the economy?
I kind of alluded to it already. I think from the perspective of Vermeer, but I think it's important for the economy overall. The trajectory of AI. I think states like Iowa, states that have the opportunity to generate abundant energy and that have supplies of water. I think AI and data centers is going to be impactful economically and nationally, and there's a lot of need to do that well, to not overtax the energy infrastructure and not overtax the water supply. So that's one thing, watching closely. And then alluded to it as well. The impact of tariffs and the impact of inflation. So when tariffs were first rolled out back in the spring, expectations that could lead to sort of a step function in inflation and a step function and kind of tightening the economy. That did not prove to be the case. Thankfully, the economy proved to be far more resilient than a lot of people speculated. I think just kind of a gradual tightening based on tariffs and inflation could very well be a factor. And then just one last thing I'll mention, from the perspective of Vermeer, the most favorable thing that probably has come out from the federal level in my 20-year career at Vermeer is tax reform, and particularly for a company like Vermeer to be able to immediately expense our large annual R&D expenditures, research and development. We reinvest the vast majority of our profit back in the business. We're constantly spending money on new products, new innovation, et cetera. To be able to immediately expense that is very valuable to us. And then for both Vermeer and our customers, being able to immediately expense CapEx, capital expenditure. So when Vermeer buys a big, multi-million-dollar machining center, when one of our customers buys a, multi-$100,000 horizontal directional drill, to be able to immediately expense that is a major savings. So, hey, wrap up on something positive. As we start to see, maybe some gradually tightening because of tariffs and inflation, hopefully that is offset as tax reform starts to provide benefit to the economy.
Well, Christopher, I'll have you do the same thing here. It's something maybe that we should be watching as we go forward, and maybe I'll prompt you a little bit on the question of if there's a change at the Supreme Court ruling, what maybe that does from a perspective as we move forward here.
Yeah, I'll address the Supreme Court piece first. The folks who I follow on that matter, who are much more in tune with Supreme Court things than I am. I'm an economist after all. They seem to think that they're not sure what the outcome from yesterday's oral arguments are going to be, but that the tariffs will be pared back in some way, shape, or form. That the IEEPA tariffs are going to be ruled unconstitutional in some way, shape, or form, perhaps by December or January, depending on how quickly they write up the opinions. What happens after that, I don't know. The devil will be in the details. Will there be refunds? Will there not be refunds, et cetera, et cetera? What happens to the countries that inked these trade deals with us if the leverage that we had for the trade deals in the first place is no longer there? Are they going to come back asking for modifications? There are just a lot of questions there that I can't pretend to know the answer to, but that does certainly introduce uncertainty into the equation. I'm going to pivot a bit, and I'm an economist after all, so I think one of the data points that I would encourage folks to follow going forward is that the Federal Reserve Bank of Chicago has a data series that they call the indexes of, let me make sure I get this right, the indexes of ag credit conditions. And so the Chicago Fed is a Fed region that includes Iowa and other Midwestern states. And they have an index of loan demand and an index of loan repayment for agriculture, the agricultural economy. And what you've seen over the past couple years is that the index of loan demand has gone up. And so farmers are needing additional loans in order to perform their agricultural activities. And recall that's at a higher interest rate, right, than it has been in previous downturns. And the index of loan repayment has gone down. So folks are taking out more loans at higher interest rates and then are less able to pay them. So keeping tabs on those indexes of ag credit conditions by the Chicago Fed, I think they're more of a leading indicator than, say, something like ag bankruptcies are. Ag bankruptcies tend to be kind of a lagging indicator, and they're a little bit messy even at that. So if you kind of want to see where the economy is on the ag lending side, and therefore sort of on the financial side, perhaps take a look at those indexes.
Well, those are both great ones to look at, and I think I won't probably connect the dot through right, but finance here in the state has also had some challenges from a workforce standpoint, and looking at different indicators there can be a challenge. But if we're loaning, if the banks here are loaning to folks here as well and not being repaid on those, that could potentially create some challenges. So it's interesting to look at that type of one. That gives our reporting team something good to go look at. And I want to thank both of you for participating today. Great timing and a lot going on in this space, and you both did a great job of helping give us a little bit of a look ahead, but also some understanding of what is going on here. If you enjoyed today's show, please like and subscribe and tell your colleagues. I firmly believe we're stronger as a community when more people have better information and make better decisions. That's what makes your business better and our community stronger. It's one of the reasons we're doing this podcast. The economy has many different facets, a lot of different numbers, a lot of noise. Part of the effort here is to help you see different aspects of that so that you can make some better decisions for your business. Thank you again for watching. Until next time, keep your eyes up and peering ahead of Iowa's economic curve.